Stop buying into this Chinese QE, Chinese stimulus crap. Guys, my name is Hamilton. I'm here with the Trading Initiative, and in this quick video, I'm going to talk about why you should not be buying Chinese stocks right now, and instead you should wait. First things first, going back 1 year, this Chinese QE, Chinese stimulus narrative has been going around. Back at like October of last year, I just did a quick Twitter search, Chinese stimulus, and you can see it's still going around. Evergrande blew up last year, and the Chinese economy was potentially going to come down. What did China announce? That they were going to stimulate the economy by loosening monetary policy, and everybody went out, bought BABA, right? They went out and they bought other Chinese related stocks, and I'm sorry to tell you, but if you bought during this rally right here, you are a net loser going back almost an entire year. There is absolutely no reason to be buying these Chinese stocks right now, and almost like sweet poetic justice, almost 1 year later, once again, the rumor mills have started. There's yet another real estate giant in China going down right now, and the QE stimulus headlines are out in full force. Once again, I just did a quick Twitter search here. You can go ahead and look. China's stimulating the economy. Go out and buy Chinese stocks, buy BABA, buy all this crap. Guys, it's not worth it, and I'm going to prove it to you through technical analysis. First off, we use ticker KWEB, KWEB. It represents Chinese internet-related stocks, right? If you look at, if we go to Koifin really quick and we pull up KWEB here, I want to show you guys exactly what is inside the KWEB ETF. We can go and look at the holdings, get a general idea of what is in it. Let's go ahead and look through by weight. You got PDD, you got Alibaba, you got Tencent, Baidu, lots of different names here that people like to trade, right? A lot of these names are very, very popular trading related names. It gives us a lot of exposure towards that communication services, consumer discretionary, etc. area of China. And these have been incredibly popular trades going back to 2020. Everybody wants to buy BABA. There's no point in buying BABA as long as KWEB is not performing well. Guys, going back almost 2 years, KWEB has done nothing. We've been trapped under these 33.5 area going all the way back to December of 2021. There has been nearly no movement whatsoever. And every time somebody goes and buys one of these Chinese stocks, they are shortly stopped out or they let their contracts go to zero because realistically, this thing does nothing. If we pull up BABA, it looks the exact same as KWEB going back to the end of 2021. There is no reason to own this stuff until we hit a series of higher highs, guys. There's absolutely no reason to own this crap. BABA is trading underneath the 200-day moving average. We're under the 50 RSI, has a shit ADR, and there's just no oomph here. There's nothing here screaming at us that we should be buying it. And by the way, look at the string of winning ERs apparently, and the market still doesn't care. There's so much risk going into owning this stuff due to the Chinese government coming in and clamping down on investing and everything else that nobody is willing to risk this unless you're a retail trader and you're being duped by headlines on Twitter or your boy is telling you to buy BABA. Once again, if you want to stay out of trouble, KWEB above 33.5 at the very minimum on a technical basis is giving you a two-year resolution to the upside. That's what we're waiting for inside of TTI. We want to see the market step in and tell us they are not afraid to own Chinese equities anymore. We would prefer to wait for a trend to develop because then that trend will give us tailwind for the individual stocks that we are buying. And guess what? I'm going to show you which one we are very keenly aware of on buying. This is the one we want to own the most, PDD. Everyone wants to go and buy BABA. Everyone wants to go and buy the EVs in China. People want to go and buy like LI and stuff like that. It just doesn't make any sense to me. Look at PDD. Look at the difference in the quality of the charts between PDD holdings and BABA, right? PDD is pressing up into new highs above the 200-day moving average and sloped up, higher ADR, RSI is firmly above the 50. This is the type of chart you want to own if you're looking to buy a Chinese related stock. Not only is the market telling you this is great, but technicals are telling you this is great. There's already buyers stepping in. I can prove it one more way. If we take the absolute performance of BABA and we divide it by the absolute performance of PDD, it gives us something called a ratio chart, right? The ratio chart gives us an idea of relative strength. When you are, in this particular example, looking at BABA against PDD, if the line is going down, which it most certainly is, that means BABA is underperforming against PDD going back to 2019. If, on the other hand, this were to go up, it would show you that BABA is outperforming PDD, which it is not. So both of these related stocks, right, BABA and PDD, let's take it off the line chart one more time. If both of these stocks are within the same area of the market, which they are, they're both internet retail names out of China, which one is the stronger name to own, BABA or PDD? BABA's trapped under overhead supply. PDD is already hitting new highs based off of the ratio chart that we just looked looked at, PDD has literally beat BABA's performance going back to 2019. So for 4 years straight, it's been a better buy to own PDD over BABA. Now, we are not owning this yet. Once again, we are waiting for Queb above 32.5. The only thing I could say, guys, is if you wait for Queb to break above 32, 33.5 area, you're going to have a hell of a lot easier time trading this stuff. You're going to be outside of this overhead supply that's been accumulating for the last 2 years. At the very minimum, you're going to be able to potentially catch the stage 2 breakout. Not saying it's absolutely going to stick, but anything right here is a no-go zone. Anybody that's bought Chinese related stocks realistically going back a year has pretty much lost. Chinese stocks on average just have not really done anything. So guys, heed my warning. Above 33.5 in Queb is the green light to go long Chinese stocks, and we will be going long PDD because that is right now the strongest stock out of China. Guys, my name is Hamilton. I'm here at the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. Do you agree? Are you buying Chinese stocks right now? Do you like the Chinese QE? It didn't work last year. Is it going to work this year? Let me know in the comments below, and I'll catch you in the next video.